Two, 1, 2. Good morning, everybody. We're gonna have a short stream this morning because I do have a lot of preparation to embark on this evening. So, yesterday we were looking to buy the markets, and it was from here. We was targeting these equal highs up here. This is a consolidation range. We swept the lows, but we didn't sweep the highs. So I was expecting price to take, or the market to take it up to that area, but we pretty much got close to it, and then we started to slowly retrace. So we didn't actually hold this because of time. Based on the model, time is the most important thing, and we entered the trade around 11 o'clock and 12 o'clock, which is lunchtime hour, started at 12, and I was not going to be available to monitor the markets, which is the main reason as to why I wasn't really able to really see anything. So I did close around this blue line around kind of 12 because I was leaving my house at 6 and I was not going to be able to, look at the markets. Anyhow, it did reach, we'll do up here at 1:15, which is about 6:30. And yeah, unfortunately, we weren't able to capitalize on this, which is fine because we will go again. We at least close with, what was it? I think we got like 4% profit from closing here. So we would have got 40% profit. Something was sort of maybe 80%. Anyway, that's yesterday. I'm gonna explain why I entered the buy. So, looking at the daily time frame, move the drawers. We have this high here, this high over here. So we failed to create a higher high on GU. We had a higher high, which is a SMT divergence, which means that we take the weaker pair, which would be Euro USD in this case, and we look for sells. Because at this point, this low, this swing low, this extreme has been taken out here, and it has been taken out here. On both of these pairs, the swing low has been taken out, so we're now bearish. In the taking of the low, there was a displacement. You can see there's fair value gaps in between. There's fair value gap here as well. So we displaced in movement, taking out this low. So we are bearish. You'll also notice, excuse me, that despite there being fair value gaps here, there's also fair value gaps here, which is where we set our targets. As you can see, these blue lines indicate the fair value gap, the bullish fair value gap. Okay. So we've just come down into this bullish fair value gap. And it's normal for price to come down and push up. But what do you notice? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So out of these 10 candles, 8 of them are bearish. So if we're bearish, despite, yes, we understand that there can be a pullback, we are overall bearish, okay? You'll notice that if we are, in theory, selling in every single one of these 10 days, 8 of those 10 days, we'll have the bias on our side. So that's why it's important to have bias, because then you can enter sales and look at that. You can see it's clean this movement to the downside. Now it's starting to slow down a lot. How do I know this? Well, one, you can see the patterns. When it moves, it retraces a little bit. Displays, pull back a little bit. Big displays, pull back. Displays, pull back. But you can see that kind of shape, that pattern where the pullback is short and small, short and small in size. You can see that starting to increase in size and last longer. So we are looking to reverse, and that is expected. Why? One, because we're coming towards this fair value gap, and two, because we would need a retracement at some point because there's imbalances up here. So I am expecting for price to reverse, and the reason why I'm able to enter the buy is the first thing is I understand that it can reverse, right? But the most important reasoning is the fact that we have this blue fair value gap. So those blue lines are marking that bullish fair value gap that we got all the way from over here. Okay, it's just displaced across, and you can see we've spiked into it 1, 2, 3 a couple of times, right? So let me show you. It's 1, 2, 3, 4, 5, 6 times we've dipped into it. Now in the dipping of it, we have had This first dip, which caused this equal highs over here. The second dip, which took out these equal highs and all these other buy side liquidities, came all the way up here to create equal highs up here. Then consolidated, came back, dipped deeper into the fair value gap. We actually have this a little amount that's now available to be displaced, or is that's left to be filled. And then we had the move. So you would notice that we got in after the biggest dip in. Now we obviously didn't know it was going to be the biggest dip, but let's see why we entered in. So time. So this is 8:30. This is 9:30. 8:30 is the open where we're expecting a Judas swing, and you can see here. I don't think I entered this. I believe no, I did on my demo account, but I had a tighter stop loss, about 2 pips. If I had the correct stop loss, it would have been 5 pips, right? So that's why I kept it there to remind myself that stop loss is also important. But the reason why I entered the sell, let's start with that. So we had midnight open here. Okay, you can see this is midnight. This blue candle here. From midnight open, we swept lows, pulled deep into this fair value gap. Then we went up, swept some buy side, but also created equal highs, which is a new target for us. I was expecting price to close above. Then I could have entered sells on my live account. Because yes, we took out this swing low here and we did retrace, but I probably wouldn't have been able to fit in this or enter this based on my entry model. But my point is that if price had swept these equal highs, I would have been more confident to enter sells during this period of time, which is just before 8:30. So during kind of London session. Unfortunately, though, we didn't get that sweep of the highs. So we swept the lows, but we didn't sweep the highs. But what I did do for us is create a target. So we're going to come back to that later. Come 8:30, which is the first blue line, which we can take out because we've marked out here. This is the market open, and we had a Judas swing upwards. And why is that Judas swing? Well, one, this is an area of, I think it was the order block, and it is the deepest part of the fair value gap from here to here. So this is kind of the area where we retract from. And then also, I believe that potentially some retail traders will see this as buys anyway. But either which way, we pull back into this fair value gap, which is about equilibrium. We entered in on the upper echelon of it because there was no other fair value. I mean, technically there was this one, but that's probably why we should have set our stop loss higher, right? But we utilized this fair value gap on its own, and we set our stop loss in reality very close to the previous high. Let's just say we set it up here, then you would be targeting low hanging fruit, which has been here. I would not be targeting much further. I mean, maybe I could target the top of the fair value gap. That's the most risk I wouldn't be targeting down here, for example, or midpoint, personally. Because don't forget, we are overall bearish, but we are looking to reverse. So I'm flexible. So we entered the sell. We're targeting these equal lows here, low hanging fruit, which is a 1 to 2.3. Okay. Second trade. So that is 9:30, just before 9:30. So that trade closes. Obviously, it stop loss in reality. Then we had. Sorry, the chart's a bit cluttered. I'm trying my best to keep it. Then we had price push up from the fair value gap. You can see we're in this bullish fair value gap marked by the blue line, which is from the daily time frame. This is just marking the low, so we can actually see the previous low that was in this dip. We sweep that low, so this black line is just showing us that we swept it. Then we displaced upwards, so we took out this high and this high, and we just about took out this high. So we took out 3 sides of buy side liquidity, though albeit very small areas because they are more so kind of order blocks rather than they are, or fair value gaps, more so than just pure liquidity. So it's kind of imbalances and liquidity mixed together. But we did so with a huge displacement. Then we had a pullback and we drew from the extreme high to the extreme low, which is marked by this Fibonacci right here. The area of which we will be looking for entry. So we notice that over here we have a fair value gap. I'm not sure what time frame that is. Excuse me. Might be in the 1 minute low key. I'm not exactly sure what time frame this is, if that's even the fair value gap. Okay, I think it's 3 minutes. So from here to here, we see this fair value gap. You notice that price didn't come back down into it here. This is the 0.5 level. Okay, so we're looking for price or entries below this equilibrium. Then price comes back down here, perfect entry. Enter with a passive stop loss. We learn our lesson from this trade. First stop loss quite passively here. And the idea behind why I did that was just because I'm targeting here and I was going to be away from the markets. I mean, if I wasn't being cautious, to be fair, no, I am correct because we would have set our stop loss below this low anyway, and we just added a couple pips to make it 10. Okay, cool, that's fine. So it was actually a good correct model. So that's perfectly fine. So yeah, this was our original trade targeting these highs with the stop loss down here. So price pretty much came up and it consolidated a bit, and I was like, okay, well, it's coming up to 12 now, which is noon session and lunch breaks. I wanted to be out of the trade, so I took out about break even. At lunchtime, tend to be looking for liquidity, so I thought it could potentially sweep this again and go deeper into this fair value gap, which is my reasoning as to why I closed it. Most importantly, because I was going to be away from the market. So what ended up happening was price just delivered through lunchtime. I was going to be looking to get back in at 1:30, excuse me, and I wasn't even able to look at the markets anyway until it come to around about here. So realistically, by the time I saw it, it would have been around here. I could have got out of the markets. Obviously, that was not the case, so we weren't able to get in. So yeah, that was our reasoning for the last kind of couple of days. So ever since then, we've just been kind of slowly moving down. Right now, it's Friday, and there is, I don't know if I showed you, but there is no news. This is excuse me, Friday, May 22nd. No news at all. There might be orange news, but I only really mainly concern myself with red news. So with that being said, we're gonna get rid of a lot of the drawers. I'm thinking about if I want to get rid of everything. I think we can. Get rid of everything, reanalyze, and then excuse me, go from there. So we're gonna start with the weekly. Weekly is kind of bearish here. Took out this low, pushed up, kind of displacing downwards. So we're actually bearish on the weekly. We're also bearish on the daily by principle. Obviously, we do have this specific kind of bullish fair value gap, which we have almost fully delivered anyway. In the daily time frame, we do have some equal highs over here with the green. Okay. The hourly, we have those equal highs over here as well. We also have this hourly fair value gap here. I'm going to make this a little bit. I think I prefer this. Oh. Okay, perfect. So we have these hourly equal highs. We have this hourly imbalance, which we're currently heading towards. We have the daily fair value gap here. We have equal highs up here, and let me just remind myself what this is from. Oh, the equal highs. Oh, so this is from one day. Wait, what? Wait, how is this 2 different days? One day, Tuesday. Oh, that's based on 5 and 10. There's gonna be quite a bit of liquidity up here. Anyway, those are the main levels. So the equal highs on the daily time frame, the daily fair value gap, the hourly fair value gap. And yeah, so now the next most important thing after we've done that markup as we head towards time. So we mark midnight 8:30. So let's go to the 5 minute and let's mark. So this is Friday, isn't it? We're looking for this and mark 8:30. 30, 12. So this is generally what I do. I mark out the times that are going to be of important value or information, but for the simplicity purposes, just going to leave at midnight and 8:30. Then I go to the midnight open. This is the specific candlestick. Wrong. Cool. And then I use this to mark out the midnight open, so we can then get to that. I'm going to remove that after I've done that. I can keep the A30 so we know when it is without having to look at the x-axis. And so we then read price based on the midnight open, because of the fact that that would be considering London session, which is actually live 40 minutes ago. So we have from midnight open, we rally up, take out some of these highs. And then after we take out the highs out, we displace downwards, taking out this swing low. You can see we also take out this swing low, push back all the way up to the deepest part of the fair value gap. Then we displace even further downwards into this 1 hour fair value gap over here. And then you can see here we've just been kind of consolidated since, but we've pulled back again. And if we are looking for buys, which would be if we're targeting these over here, we may get another drop, maybe even deeper into this area. We've created some side over here, so kind of my read on it. But I'll be honest, the move kind of already happened, at least in consideration from midnight open. You can take out these highs, displacing. This would be the main entry right here. Model screams at me right here. I'll tell you why. Over here, what do you notice? Well, we're taking out 1, 2, 3 areas of sell side liquidity, right? So would be bullish, right? So meaning that would wait. We draw a fib from the extreme low to the extreme high. You'll notice that this fair value gap that we've drawn is above the equilibrium, which means it's a premium. So we would be entering in low hanging fruit on the edge, and this is the first fair value gap contributing to the first candlestick contributing to fair value gap. It's actually up here. However, you do technically have the order blocks over here. I'll actually just use this and then add like maybe 2 pips. And then I'll be targeting the middle of this fair value gap probably. It's not the best of trades, but I wouldn't really have that much time of a stop loss. I mean, technically you can maybe have it here, but it would depend on the smaller time frame. Yeah, no, we would have it all the way up here. I'm not gonna lie. There's not really the best of trades in terms of risk to ratio. But that was the idea. Sorry. Tired. Oh, excuse me. So we need to remind ourselves, of the overall trend. So the daily time frame, we are bearish, but we are expecting a reversal soon, especially based off of this fair value gap. The reason why I believe it's here is because there's no other clean imbalances. So this one here has already been filled. So this is the only imbalance left. I mean, there's a sell side below these lows, but there's a lot of imbalances that have been left above us. There's equal highs here, there's an imbalance here, there's equal highs here, there's a lot of things upwards, for price. I think it's going to slowly transition into being bullish. And with that being said, though, it doesn't mean necessarily that we're not going to get sell opportunities. We had a sell one overnight, about to be 8:30. We can look at markets again to get a better idea. With GU, the only main difference with GU is that on the daily time frame we see the high, which is what caused the divergence. So high, break of the low, lower high, break of the low. So this one failed, was a fake out, right? All the life redoing this. Looks messy. Okay. Bearish fair value gap. I was going to do this one, but we pretty much filled most of it. You can see we came very close, so it's like not really much point in keeping this. So bullish fair value gap here, bearish fair value gap up here. That's the low we took out, which we're actually using as kind of resistance a little bit. Okay, so what do I notice here? I'm actually a bit more confident in being bearish than I am EU because of the fact that yes, we are bearish in the grand scheme of things, and we are actually have a point of interest to sell from because this is in a bearish fair value gap, of which we're in, and then the target is down here. So we actually have more of a reason to sell than this, right? If we also look at this, I would be looking for price to actually take out these equal highs to then factor in the sell. Then I'm of similar interest. The only kind of caveat is that we have technically filled in most of the fair value gap. When it's filled in most, I don't really like targeting it again, but I would still expect for price to get down there if that happened with the sweep of the equal highs, the entry model. Our target would somewhat be there. But EU, I mean GU is a little bit cleaner in the fact that on the larger time frames, we're in this bearish fair value gap, and the bullish fair value gap of our target hasn't been touched at all. So we're filling this one. When you take out an imbalance or you target up to the upside, you tend to go towards the downside. So I'm going to use that opportunity to mark out the areas as such. Then trend line, be the midnight open. Market open, we don't have it, so we can get rid of this. But we notice we go up, we go down, go up. This is accumulating. So the issue is we don't know if it's accumulating up or down. Now with our bias, we are bearish on this, meaning that we would be expecting sweep of these lows, and it should be expected now on the hourly, find some equal highs to sweep above. The lowest I'll use for that is the 50-minute, and you can see potentially some highs over here. What would be nice is a sweep of these, and then entry model occur, and then we can kind of have that. I would expect this pullback from 8:30 around to 9:30, and displacement from outside of the fair value gap. I mean, we can get a large expansion here potentially. We would have to be very bullish on the dollar. That's what it is, but this is kind of what I'm expecting. We'll mark that out. We're going to leave GBP pairs alone for now, and instead we're going to target this and then look at DXY, which is where we should have started, but it's fine. And let's see where the dollar looks to be going. So we've been consolidating since last week, kind of the end of last week, on the dollar around this kind of equilibrium level. This was the imbalance or the gap in the market that we've kind of fully filled now, because that red line marks the top of it, of which we've tagged ourselves into at the top. We've actually touched the top of that imbalance to the T, which is literally right here. So you see that these levels really do matter when you can literally see price respecting it. And we drew these in a long time ago, right? So that's key. So normally when that happens, you would want to be bearish, right? Because we've taken out the imbalance on this side, and we now have a lot of imbalances to the downside. What do we have? We have this value gap, which we kind of use to propel ourselves up. But you'll notice that this orange box here is actually marking the gap in the market from Thursday to Friday. It closed here and opened above, so there's a bit of an imbalance here. That's what the orange box marks, and the gray one just simply marks a fair value gap on the daily time frame from this low to that high. Now with our new system, we do use the kind of get it out. We use this to mark blue for bullish. Yeah. We can get rid of the gray box now, so it makes it a lot cleaner. We'll keep the red box just because we know that it's the market imbalance. So we have this bullish order block. I might make this a different color now because it'll be a light green. The neutral, let's give neutral vibes. Perfect. Right. So this is equilibrium. This is the bullish imbalance. This is the bearish kind of imbalance which tagged ourselves in. So from this point, we're in the premium. We've just filled the imbalance. I'm bearish on the dollar. We go back to our analysis. You would notice that we are bearish. We're bullish on the dollar in this instance, and in this instance, we're more bullish on bearish against the dollar. The reason being, with this one, we've pulled back into this value gap. Had a displacing just now, displacing market structure shift to the upside, taking out this high, this high, this high, this high. So on this account, we would be mainly bullish. You can also notice that we took us some buy side, took us some sell side. We went deeper here, which is more of a what do you call this again? Manipulation, Judah swing. Then we've had a shift to the upside. Then you could potentially even enter some buys over here. You'll notice that there's a fair value gap over here. So I would be interested in buys around this level here, because this one lines up with DXY. So you'll notice that it's a story we're telling from the beginning of the large time frames, daily, weekly. We transition into the 5 minute, but we have one idea, right? So the thing about GU is I prefer it for the ideas of a sell, because like I said, we sweep this, we then take out some swing low, and then we displace in doing so. We then draw back into that displacement range and can target some lows. And this one was that we're in the bearish fair value gap, and we have a clean bullish fair value gap, which is a nice target. So this is cleaner on the principle of idea, but EU tells the cleaner story in the sense that it makes sense because it lines up with the ideas that we have from DXY. It just makes more sense for us to be bearish from, last week Thursday, being that we filled this imbalance. And I'm looking here, there's not really much. Yeah, there's like clean liquidity. I mean, yes, there's obviously buy side, but there's no equal highs. I guess there's this imbalance up here, but that's quite far away from where price is at. And it's more likely for the dollar to come down because of the fact that there's a bullish imbalance and the gap in the market, which is in the discount. And then use that to either go up or potentially even now target these equal lows down here. So there's a lot of ideas. This should actually be green now because we've changed the model. So there's these equal lows here. It's just so much. So that's why I'm more bearish than I am this. And EU lines up with that story more, simply because of the fact that we can buy this. Now, the question is whether or not we buy this. So if you look at time, we are in the 9:30, which is the perfect time for London session to kind of enter. Well, not perfect, but it's a good time to enter on London session. Okay. So if I was to enter, probably be like something like this. It would be targeting these equal highs up here. So this I'll probably enter on like a small amount of risk, and mainly because of the time, kind of outside the strict time frame we enter on. I'm a bit more lenient. Let me just get this ready. In as a buy. $60, hold on. 60, 10, 30. Right. So the reason why we entered the buy, we have these equal highs over here. We are on the DXY, we're bearish because of the fact that we've already taken this out. You can see here we've also taken a lot of sell side, kind of retraced back into this. balance here, which we tagged into over here, and it looks like we're going down and delivering towards the balance and fair value gap, which is in the discount. This green line marks the equilibrium. We are in the premium. So for that reason, I'm bearish on the dollar. EU lines up with this idea more because dollar is a second pair, which means that we need to be bullish against the first pair, which is euro, and here we are bullish against the dollar, and that lines up with DXY. And then also, this is not just that, okay, oh my gosh, it's bullish on the small time frame. It's the story it tells from the daily time frame. Yes, we are bearish, but at some point it's going to be normal for us to expect retracement. Whenever you are bearish, you don't just go cleanly straight down. Sometimes you have more small pullbacks. So what do you notice? Well, first of all, let's go back in time. When we're bearish, from this point, we created this low, had the pullback all the way up here, created a lower low, traded below this low here, pullback, traded all the way down here, pullback, traded here, pullback, and then we created this kind of bullish kind of change of character. Then what do you notice again? Bearish, pullback, bearish. What should we expect? A pullback. But it's not just a random area. We have this bullish fair value gap. There's no other clear. I mean, you kind of have equal lows over here, but other than that, close to price, there's not really that much cleaner of an area than this fair value gap. So we've tagged into it already once, twice, and we delivered over halfway, expecting some sort of reaction to maybe push us up to one of these imbalances to then push back down again. So it's normal for us to expect some bullish momentum. And you'll notice on the smaller time frame that we've had a shifting structure. This is a 1 hour fair value gap. We've come back down into it, slowly accumulating, and minute open swept some of these highs, came back down into the fair value gap, displaced upwards, and that's where we got into our entry, targeting these equal highs over here on the hourly time frame. So it's a story we're telling. It's a seamless idea. It's not just reacting to price. It's the story. We will not be entering any buys on GU because the story is not the same. From the daily time frame, the idea, or at least the story that we're seeing, is that we are bearish, yes, but we haven't tagged in to this bullish fair value gap. I mean, technically, we have tagged into this bullish fair value gap and had the reaction already. But what do you notice? The difference between this and the Euro USD is that we've kind of already made the move from the fair value gap. We're now in a bearish fair value gap, which is fresh. This one has been touched. This is fresh because we've not really been this high before in the fair value gap, and the idea of it going up further is possible, but in terms of the seamlessness, is not fully there yet. Does it mean it's going to go up? Not necessarily, but for me to enter sales from 8:30, I would expect price to sweep these equal highs, then enter the sells. So if I'm bearish, this is what I should expect. But the only way I can be bearish is if we have that move first, and then we can reassess DXY, we can reassess multiple things. But in the meantime, for us to be even bearish, we'd only be interested if these hourly tags are taken. Therefore, I'm buying it towards it. That's why we put a low amount of risk, not a full amount, because there is a plausible idea for price to actually go down, especially on Euro USD. But yeah, this is why I'm entering the buy on Euro and not GU, because the idea is cleaner here. So yeah, that should be why. So that being said, I should expect price to come back down more into the fair value gap, but it shouldn't go below here. Then we just wait. I mean, the next thing to do will be wait for 8:30, and then we can then go from there. Now, the only caveat is that I'm using a bit of experience here to enter early. Normally we enter from 8:30, but we are kind of in the London session, which is partially why I'm able to enter from about 11 to 12, which is it's 9:30 right now. So in about an hour and a half, 2 hours and a half, we will be looking for exiting this specific trade, then waiting for the New York Open. But that's again dependent. We may take some off, we may take all of it out. Depends on how we're feeling. That's kind of the idea for today. Hopefully you guys gain some information, some knowledge. And yeah, I mean, there's not much else for me to explain. I might just post this in a Telegram. I haven't posted a trade in a while. And then I can actually even use my trading journal to log the trade, which I actually need to update some of the things on the website. We changed the theme. I don't know if I've showed you guys the new theme. I like the logo a lot, so I based the kind of the theme on the logo. Quite interesting enough. And you can actually USD that we tested out here. But anyway, EU, let's call this account. Let's delete this trade as well. Go new strategy. We're gonna call it. We call it. Let's just call it ICT22. And we're gonna call it account test. Okay, so in this account, set the balance to how much was I deposited 25, and then this is the trade we're in. USD. So put in a 1.614 plus 1.16 042. 1.6 357. We decided 0.1. Oh, they're right. But what do you mean 28%? I'm only risking £5. 4. Is this? So what time frame is this? The 3-minute. This is the entry. If I delete it. How is the edit button over the delete button? How have I done that? Yo, you just have to be trolling. So I can't delete it. No, that's so annoying. Yo. Yeah. So an hour later. That's so annoying. You don't understand. I do like how you can edit it though. You can annotate it a little bit. It should be an opportunity to text. There we go. But okay, that's not working. Hold on. I need to make some of these notes. Oh, I haven't tested it out. Okay, I'm boiling. Hold on. I've done this in a while. Okay. So when selecting an image of trade, got a list. I'll explain what I mean by that later. Second one is the delete image and the edit button for a screen art is in the same location. Okay. So what else? Right. So this is the 3-minute before. We can then get the. That looks like it's gonna hit stop loss. Let's get the. This is 15-minute before. Hourly before. it's probably already hit stop loss low key. Look at the daily as well. No. Can't lie. Okay. I'm gonna add a tag to this. Hold on. I don't know. This is within London Kills, no? So I can't really say it's a bad trade. The London session is long. Okay, let's have a look at why we stopped out here. That's the side. Let's go back. Might just be because of time. Took the lows, took the highs. Traded below a low. Technically, this is a sell opportunity, but that means we'd have to be bullish on the XY. Let me see the XY really quickly. No way we're bullish, right? This is an idea. We enter this on a demo account though. Only because it's slightly against the XY's bias, but the principle is good. But the highs and the bullish for value up, targeting the low, the bullish for value up. This will be the last where we enter before 8:30. Let me double check the London Kills then time frame again. 7 to 11, right? 7 to 12. 7 to 10. entered. My demo account is just stuck on order has been filled, waiting in the queue. Oh, damn time. All right. Cool. So let's see where this ends up. All right, it's gonna be me for the day. I'm gonna do some more prep on some other stuff, and I'll let you guys know how the trades go. I'll keep you updated on Telegram potentially, and then revisit the markets. But for now, we'll probably be back at 1:30 p.m. in GMT and then 8:30 a.m. New York time. So I'll see you guys then. If I'm not live, then see you guys today's Friday, right? So maybe next week Monday. And yeah, been a pleasure. Peace.